Hello folks, this is Raj Sastry from Raj Option Trading. Today is May 5th, May 8th, 2021. I want to cover heavily shorted stocks, volume greater than 1 million. So with that, I got a couple images here. One is Fulgent, they're into medical diagnostic space. We got Fastly, which is into content delivery networks, Blink charging, it's EV electric vehicle charging, Clovis Oncology, it's into cancer, and we got Nano Dimension, which is 3D printing. So with that, let's look at a couple of these stocks and see if they're worth investing at this point. So here are the top heavily shorted stocks. As you can see here, top of the list we got Fulgent Genetics, 43% short. Then we got Root, Tattooed Chef, AMC, and so on and so forth. We'll cover this in a little more detail as we go forward. So this is the full list of stocks. We got 25 in this page, and the way it's organized is I got the short ratio, which is really short of float, and the one on the top here is heavily shorted. It's 43%. From there onwards, it's in the descending order. Next is 42, 41, and so on and so forth. And I also highlighted bolded stocks that are doing well fundamentally. As an example, Fulgent Genetics, it's got $422 million in sales and nice sales growth, as you can see here, and good gross margin. So and also, as you can see, our institutions are owning it 34%. Some insiders are selling it, which is not too bad at this point. RSI is low. That means stock is really oversold at this point. Good to buy. And price to sales ratio is low. That means it's not expensive from a valuation perspective. And also, as you can see here, they're down 60% from 52-week high. They're still up, respectable 376% for 1 year, and they're also up for half year. But if you look at the quarter, 1 month, 2 week, 1 week, they're down. And now they're showing some signs of progress here. In last 1 day, they're up 2.23%, and they also had their earnings. They did pretty well in the earnings, so that's why stock is showing some signs of turnaround. I would be buying this Fulgent Genetics into this turnaround slowly and build a position. So given there is a high short ratio, any good news can cause the short squeeze. So I like to buy fundamentally strong companies and hold it for a long time. Then we got a couple more here: Root, Tattooed Chef, AMC, XPeng, and Nano Dimension. So here also the methodology is same, even though these companies don't have sales growth. As you can see here, they got good sales, and some of this, for example, AMC has got good gross margin, and Tattooed Chef also has got relatively okay gross margin. And Nano Dimension has got a very good gross margin of 31%. So as you look at this, as you go forward here, look at the 52-week, how much off it is from 52-week high. It's pretty much, we got, double-digit off here. And as you look at here, half year, quarter, even 1 month, many of these stocks are down here. But as you go into 1 day, they're showing some signs of improvement here. With the Root, Tattooed Chef, XPeng, and even Nano Dimension for that matter. So you want to wait for a small turnaround before you slowly start buying some of these stocks. So right now it's showing some signs of turnaround. So it's good to build a small position and take it from there. Then we got Blink Charging and Clovis Oncology. Blink Charging has got $6 million sales. It's not a big number, but they got sales growth, as you can see here, and also they got a good gross margin. From a valuation perspective, Blink Charging is a little bit expensive. Price to sales ratio is above 100, but as you can see here, they're off 49% from 52-week high. They're respectable. They're up for the year, as you can see here, 1827% up. But as you look at the quarter, month, 2 week, 1 week they're down, and one day they're showing some signs of improvement here. It's too early to call, so I'd be building a small position here, just to make sure I get hold of this stock as it's kind of showing some signs of improvement. I'll not be buying too much, but buy some and hold it for a while. Then we got Clovis Oncology, $5 stock, very low price, but they got a nice sales here, $165 million, and as you can see here, they got sales growth, 1 year and quarter over quarter, nice gross margin. And here also, as you see here, I think some insiders are selling both Blink Charging and Clovis, but nothing to be too much concerned about, I would think, even though it's a little high for Blink Charging. And as you look at here, with the Clovis Oncology, they're down 49% from 52-week high. But as you go into quarter, 1 month, 2 week, 1 week, they're down. These guys are also down for 1 day, which is 0.53%. So I'll be building a small position here. Given companies fundamentally strong, they got some sales growth here. I'm willing to build a small position given the stock price is also low. Then we got Clover Health and Nikola. These two don't have any sales, no sales growth. But Nikola has got some gross margin. I would not trust this heavily, but at least they got some gross margin here. And these stocks, as you can see, there's some bounce in both of these stocks in 1 day. That shows, at least in Nikola's case, it's showing some signs of short squeeze here. And even, Clover Health as an example, it's up 4.74%. So it's kind of showing, it's okay to buy some and expect some short squeeze. For example, Nikola, it may be already in a small short squeeze here, 13% up in 1 day. Then you got Workhorse. This has got $1 million sales, not a big number at all. With the small number here, sales growth, is a little bit exaggerated, as you can see here. But overall, there's some sales, which is a good story. And this stock also, as you can see here, they're down half year, quarter, 1 month, all the way into 1 week, and they're showing some signs of progress. I think this company is good one. You can buy slowly, given it's a $9 stock now. It used to be a high flyer in the past. I think it's good to slowly build a position here and wait for any short squeeze type situation unfold. Then we got Medalist, Adapt, ADAP, and Adapt, as you can see here, it's got a $4 million sales and nice sales growth, given it's a small basis. And I think they got a little bit higher price to sales ratio. And this stock, I think it's down from 52-week high, down for half year, all the way to 1 day. I think this also, given it's a lower price stock, showing some signs of progress here in the sales growth and a nice institution ownership here for Adapt ADAP. I think it's okay to buy this one also into this weakness. And then you got HUYA. HUYA is a $16 stock. They got a good sales, $1.6 billion sales, nice sales growth. It's really good to see sales growth with a high sales number here. And as you can see here, they got good institutional ownership, as you can see here. And if gross margin is 21%, not too bad. And they are off 54% from 52-week high. They're barely up for 1 year, 5.60%. They're down all the way from half year all the way to 1 day. I think this one also is good to build a small position. They're still they're still down for 1 day. I think it's good to build a small position and take it from there. Then we got a couple more stocks here. SENS, GOGO, GoodRx. GoodRx seems it's a good stock, but has not done much of late. Even Butterfly is a good one. Skillz, same story. As you look at these stocks here, some of these are trying to show some signs of progress. For example, GOGO, it's up 4.49%. and Butterfly is up 0.83%. Same story with Canoo and Skillz. So some of these stocks, as it's down all the way, if it's trying to show some signs of progress, it's good to buy some and hold it. As an example, GOGO here, as you can see here, it's showing some signs of progress: 1 month, 2 week, 1 week, and even 1 day. Then we got a couple more here. Second Sight, Lee, SmileDirect, and XERS. And XERS, as you can see here, it's got a good sales growth and a nice gross margin. I think it's a good one to buy. And right now it's still falling, as you can see here. Even 1 day, 1 month, 1 quarter, all negative. So it's good to initiate a small position here. Given the stock is low price, fundamentals are okay. It's good to buy some. And SmileDirect, this used to be a very good stock, when it became IPO, but off late it's fallen off the grace. But as you can see, it's showing some signs of improvement. It's good to buy it into this weakness and hold it for a long time. Same is the story with Li Auto and Second Sight. Also, it's a good stock. It's good to build a small position and take it from there. Then you got a couple more here. I will not go through everything. You got the idea. Look for companies with strong fundamentals, and also good gross margin, and see if there is a sign of improvement as you traverse from 1 year to half year all the way to 1 day. Look for signs of progress. If there is a signs of progress, that's one you want to pick and build a small position. And Intercept, this used to be a darling stock long time ago. Now it's fallen off the grace, as you can see here. It became a $17 stock. Ouch, that hurts. But if you see here, it's off 82% from 52-week high, down all the way, as you can see here. 1 year, half year, quarter, 1 month, all the way it's down. Now slowly it's showing some signs of progress. I'll be buying this also into this weakness slowly and take it from there. Then we got Sorrento, Walmart, Carvana. Sorrento is a typical meme type stock. It goes up and down. I think it's got a good sales, as you can see here, $40 million in sales, a respectable $2 billion market cap, and they got some sales growth in 1 year. Nice gross margin. So I would be, buying this also into this weakness. And this stock, as you can see here, is showing some signs of improvement in 1 day. That's too early to call, but that's why we buy this. When it's showing some signs of improvement slowly, and start building the position. And Walmart is again a good stock here. I think this is showing some improvement at this point. As you can see here, it's up for 1 month, 2 week, 1 week, and down a little bit. I think this one is a good one to buy into this weakness. If you can't buy the stock outright, you could also buy a call spread. Maybe in this case, 135, 145 call spread will do. Maybe say 3 months or 4 months out. That'll do the trick. Carvana is a car vending machine, as you might be knowing. Same story here, nice sales growth. They got $5 billion in sales. That's a good one. And as you can see here, they're down for 52 week from 52-week high. And they're showing some, at least some, right now they're still falling, as you can see here. Even 1 day they're down. I think it's good to wait a little bit and see if this stabilizes and slowly build a position into this one also. Then you got Vo Pharma. I think it's a good one. Stock has fallen off from the grace. As you can see here, they're down all the way from 52-week high, and also they're down 1 year, half year. In 2 week they're 0.0%. It's showing some signs of improvement at this point. I think this one is good to buy into this weakness slowly and build a position. Only caveat is it's got a high price to sales ratio. Then you got a couple more here: Altis, TXMD, KPTI. Same story here. Look for fundamentally strong companies and look for some signs of improvement as we get into 2 week, 1 week. That's what you want to buy. So we got a couple more here. I will not look at this in detail, but I love Inseego. Inseego has fallen off the grace. Nice sales growth, as you can see here. I've been building a position in Inseego also, and it's down all the way. 52-week high, 1 year, half year, all the way it's down. I think now it's showing some signs of progress. I'm building a position into this one also. And same story with Tilray. Fastly is one of my favorite stocks. I think they had a quarterly earnings, and also they got some short sellers breathing down their neck. Stock has fallen down drastically. As you can see here, in 1 week they fell 34%. I'm a buyer in this stock. I'll be building a small position in Fastly and wait for stock to take off. Then we got CPE and OPCO Health. I think these are also same story here. CPE is showing some signs of progress in 1 month, 1 day, and 1 week, 2 week. I think this one is good to own. As it comes down a little bit. I think right now it's up a little bit. If it's down, I would buy this on the pullback. And same story. OPCO Health is already down a little bit. I think this one is good to buy and build a position. I'm still trying to figure out why this company has fallen off so drastically. They got good sales growth. I think this one is good to buy on this weakness and hold it for a long time. And we got a couple more here. As you can see here, I love Chewy, 8x8, Wayfair. Those are all good stocks. APN used to be a high flyer. This is also a good one to buy. And even Dynavax is also a good one. So with that, we'll look at one stock in a little more detail. It's Fulgent Genetics FLGT. They're into COVID testing and genetic testing. And from a news perspective, looks like they had this quarterly earnings, and it's a little bit better quarterly earnings. That's why stock is trying to make a small comeback. And if you look at Fulgent, if you compare the stock to the industry is in 5 day they're doing 0.9% negative. This company dipped a lot. Same story with the 1 month. But if you look at a little bit longer horizon, why to year to date, 1 year to 3 year, this company has done much better than the industry. So you got to be looking at companies which is doing or outperforming the industry, and they have a little bit weakness as of now. So that's the stock you want to buy. And from a earnings per share perspective, as you can see here, they've done nicely. They got positive earnings per share. They got nice sales. It's a huge uptick here with the COVID testing, and shares outstanding is a little bit growing, but it's okay, not too much. And as you can see here, they've done nicely. They got $422 million in sales, a nice gross margin. Short ratio is high. This is a topper in the short ratio stocks. And I think they're doing nicely, but they're off 60% from 52-week high. And as you can see here, they're still down for 1 week, 2 week, 1 month, quarter. Now they're showing some signs of improvement after the quarterly earnings. And if you look at fundamentals, they're making money here. Earnings per share $9.44, and they got good amount of cash, low debt, which is always good, and they got nice volume. So this is a liquid stock. You can get in and get out without too much leakage, and they got nice 2 year return, as you can see here. So 1 year they're up 376%, 2 year they're up 1098%. It's a very good return, and they got good ROI, return on equity, return on asset. That tells you company really knows how to manage it effectively. That's always a good sign. So if you look at the chart itself here, nice looking chart. They've done very nicely back in 2020 with all the COVID testing, but then they kind of dropped off as COVID vaccination started to take full effect. And from a RSI perspective, it's low, and even IV percentile is a little high at this point. So because IV percentile is high, you could even sell some call spread or a put spread or a put option if you want to get some premium. But I'm thinking this IV percentile will go down pretty soon because they had just announced the earnings. This will fall off pretty quickly. You may not get a chance to sell put options, at this high IV percentile. And as you can see here, their DMI perspective, the blue line is trying to tick up here. That's a good sign. I think stock is showing some progress as the earnings call already happened. It's a better one. And from a on the balance volume perspective, ticking up, so people are buying into this stock. And from a check-in money flow perspective, I think smart money is flowing into the stock. That's a good sign. So with that, I would be a buyer of Fulgent Genetics. I think it's showing some signs of progress here, some improvement after the quarterly earnings. So with that, thank you very much. Happy investing and trading. Please subscribe to Raj Option Trading, and thank you.